you have a chart here showing interest rates and stock prices, and basically saying, the stock market's had a 40-year tailwind that it's been able to enjoy, right? It's just had this secular trend of lower and lower interest rates that fueled a lot of the capital flowing into the equity markets, made, credit money really cheap for companies to borrow, buy, invest, buy back their shares with, et cetera. And you can see what happened with stock prices as a result. But now your chart shows that secular decline may be over. A reasonable person could expect that relationship to continue, but it's now just going to be inverted, where, if interest rates are higher going forward than they have been in the past couple of decades, that we would expect equity prices not to be as well supported. So can you just opine a little bit more about what you expect there?
Well, I think people forget, or at least they don't give credit where credit's due, and that is, with a declining interest rate environment over this whole 40-year, that's a long time, a 40-year period, then, it's been hard not to make things work. I mean, anything, real estate, private equity, private business, anything you invested in, stocks, bonds, everything had that going for them, because the cost of capital kept going down and down and down. And so let's say that you go into a period, and this happens in our business, where you have a change. Something changes, and you go into a time where all of a sudden, let's say we're going to stay around 3 or 4% inflation for the next 10 years. Maybe we go to 2, or maybe we go back to 6 and back to 3. All of a sudden, though, it's not that 1.5, 2 that was just stuck there for 10 years. You have to get in a position where you're starting to look at things now, and what's that inflation rate going to have? What's impact on my investments over a 10-year period? Let's just say it averages 3.5. Well, that's going to impact me 40% probably in the end. And they forget about that. And I've seen this before. I'll give you an example. People were so hung up on high interest rates from basically 1970 to 1982 that when they flipped the lid in August of 82 and rates started down, it took people 3 or 4 years to realize that, hey, there's a change going on here. And they stayed with the old system, what they were doing. And it took a long time for them to realize that, hey, it's not like it was, okay? And so that's sort of where I think we could be today.